Everybody, Scott Sachs with Synergy Groups. We are doing the June year-over-year RBI stats for Montgomery County, DC, and Arlington, Virginia. Let's jump right into it and talk about what's going on in the market so that you know how to prepare for the fall 2026 market coming ahead. Average sold price across DC, Montgomery County, and Arlington. In DC, prices were down almost 2% at $955, $963. In Montgomery County, prices are up year over year, that is for June, 3.83% at $860,000, $324. Again, this is an average of single-family homes and condos. So this incorporates fee simple, single-family, and condos into this number. So if you just take a single-family home number, the average for Arlington, which is $990,601 for the blended average, is actually almost $1.5 million for single-family homes, June over June, trailing numbers. But it is up 5% year over year. So both Montgomery County and Arlington up almost 4 and 5% respectively in their jurisdictions. Active listings across jurisdictions. I'm not doing this red or green because depending on whether you're a buyer or seller, this could be good or bad for what you're trying to do. This is why you talk to your real estate professional and they guide you and they strategize and they bring you over the finish line with the success that you're looking for if you're working with the Synergy Group. But active listings, DC down almost 6%, Montgomery County up 15.25%, Arlington up 7.16%. Okay, now before we get into this, I'm going to roll to my favorite statistic, which is the average sales price against the average original list price. So this is before any price reductions, so people aren't taking things on, putting back on, making ratios look better. This is a true sense of how are the traded properties actually performing. In DC, 97% even of a list to sales price ratio. Montgomery County, almost 99%, and Arlington, 99.5%. Now, you look at these numbers and you go, well, how is that possible? Montgomery County inventory is up 15.25%, and they're still getting almost 99% of the list to sales price ratio. The answer is, this is closed volume. What I'm trying to say is, not every property listed sells. Not every agent sells the property they list. Working with the right agent to sell it in a timely manner at the right price in the right amount of time is crucial to the agent you select. Now, back to the numbers. The reason you're seeing this is because we are in an environment right now, in a marketplace where buyers are using discretion. Rates, 10-year say at 4.55, down 7 basis points from 3 days ago. So we are seeing this retract a little bit. I'll get into the Fed a little bit too as far as second half projections, but rates are still high. 30 years are still sitting 6.5% to 7%. You can get them for less. A lot of people are going arms, discussion for another time. But what you are seeing is discretion in the marketplace amongst buyers. You are seeing some areas of inventory, condos specifically, increasing. You are seeing DC delistings factor in this number as well because some properties aren't selling. We have seen a pickup in DC generally. Some markets, Georgetown, DuPont, Capitol Hill, etc. But the properties that are actually trading are ones that are priced well and are updated. So if you're selling, you need to be cognizant of what's really happening in the market. You have to pull specific data to your subset of properties that is going to dictate what buyers in your area are going to be looking for, right? So what we're doing when we're analyzing a listing is looking specifically at, if I'm a buyer, what are the properties I'm looking at and how do you compare? Very analytically, what is your pricing? What's the cost approach? How do you compare? What are the days on market? What's pending? What's sold? What's the contract price? All of these things, and it all comes back to these numbers. These numbers are important because if you're actually pricing right, you're still getting close to ask price, even in a market where inventory is up. Now, how is the cost of debt or affordability impacting the marketplace? This is going to be a second half of the year question. It's something that we at the Synergy Group are monitoring closely. The Fed chair had his first deposition yesterday talking about how he thinks the market is going to do, and he was hawkish, meaning he's saying that rates are going to either remain consistent or there might be an increase in rates. He also made comments saying that he doesn't want rates to be higher because he understands lower rates are better for real estate, better for the economy. But it doesn't mean that's not what's going to happen, because the inflation data coming out, pulling out oil, pulling out a lot of the things that are happening with Iran right now, are still too hot and way ahead of the 2% target the Fed has historically kept in mind for inflation. So this is something we're watching very closely. If rates continue to go up, which they were at 4.62, even almost 4.7 in the last week, and keep in mind, as a relative data point, October of 2024, this was over 5%. It was at like 5.25%, and the rates were at 8%. It was the highest we've seen rates since I started doing real estate 23 years ago. So we are watching this and what that impact could be. But what we're seeing right now is in areas that are fairly insulated, like Montgomery County, Arlington County, even Fairfax, areas of Leesburg, we are still seeing pretty good volume and low inventory for the products that we're talking about. So if you're out there, you're considering a purchase, understand that you have to understand that the market is very nuanced, not only from a price level perspective, a neighborhood perspective, but you've got to understand how that all interrelates to be able to make a decision on, am I overpaying for this property? Should I get involved in a multiple bid situation in a market where there's 3 other properties sitting? Why are those other properties sitting versus this one getting multiples? That's important to understand. And as these numbers reflect, it's a price war and a beauty contest in the marketplace. And for the buyers, they're willing to pay for it if you do it right.